Hey, badass business owners, have you ever found yourself completely lost and confused on this entire profit and loss statement thing? Not only do you not understand how to read one, you don't even understand why you need one. Why is it so important? Why is everybody telling you to do it? Even more, you start watching all these videos and you get even more confused as to what's going on, and your head is just spinning, but yet you're like, okay, I understand, I need this, I need to understand it, but where do I start? Well, let's start here. Let's go over 10 things you need to know and understand about a profit and loss statement. All right. I've got other videos where I'll walk you through and teach you about it. But for now, let's just find 10 things that are going to help you understand why people are so hot and bothered about you understanding what a profit and loss statement is in the first place. Well, the very first thing that you need to know before you even dive into a profit and loss statement is this: all the hustle in the world does not equal profit. Let's face it. It is a profit game. It is not a sales game. You can create all the sales in the world, but if no money is ending up in your pocket at the end of the day, it doesn't mean anything. I've had people where they're crushing it. They're doing $50,000, $60,000 in sales, but yet they're not making any profit. And I've had other people that are making very little bit of money and they're crushing it. They've got all kinds of profit. At the end of the day, that's what it's about. It's about the profit. It's not about the sales. Yes, you need sales to be able to create profit. They go hand in hand, but ultimately you want to have profitable sales. And that's why your profit and loss statement is so critical, because it's going to help you understand the number 2 point, which is a profit and loss statement is helping you understand the flow of money through your business. It's going to help explain, this is all the money that came in, this is the money that went out, and this is the profit that you have. And really, it's going to open your eyes to go, wow, I didn't realize that I was spending money on all these different things. Because all you're doing is really, you're taking in the sales and you're looking in the bank account and you're like, where's my money, right? Well, that's not going to help you understand where the money actually went. That's where the P&L comes in, because it's going to actually explain that to you. The third point you need to know is that your profit and loss statement is your business's report card. It's going to let you know how you did. So for example, if somebody's doing, $40,000, $50,000 in sales and they've lost $3,000 in profit, they're going to get an F on that report card, right? They didn't do well, especially when you dive in and you start going, why are you spending all this money on all these different things that you just shouldn't have been spending your money on? But then again, you might have low sales, but you're having lots of profit and you really ran really clean expenses and costs, and you're going to get an A+ because you ran a great business. So just think of a profit and loss as your business's report card, and it's kind of letting you know how you were doing. Which brings us to the very next point, which is I want you to know the number one calculation that everybody should know in their business, and that is sales minus cost of goods minus expenses equals profits. Now, you're probably wondering, Tammy, why is that calculation important? One, that calculation is going to help make sure that you are pricing correctly, but it also ties all the way back to the profit and loss statement, because your profit and loss statement is set up with 4 sections. It's going to have your sales, it's going to have your cost of goods, it's going to have your expenses, and then it's going to have the profit. It follows the same pattern of sales minus cost of goods minus expenses equals profits. And then when you go to price, you can use the information from your P&L and that calculation to be able to price better. So your profit and loss really will help you with your pricing when you understand that number one calculation. Which leads us to, why are cost of goods and expenses separated? Aren't they all just costs? Aren't they all just expenses? Because I'm sure some of you have heard, oh, you just take your sales and you minus your expenses and then you get your profit. Yeah, but what we want to do is we want to separate them out, because your cost of goods are basically anything that you purchase that goes into making or providing the product or service. So I'm going to grab a pen here and we're going to use this as an example. If I go out and I buy 10 of these pens, my cost of goods are the 10 pens. But if I also go out and I buy all the parts and I put the pens together myself, now I've got the parts and I've got the labor associated for the cost of goods, because I cannot sell the pen without the parts and without the labor to put them together, or I just buy the pens and sell them directly. That's my only cost of good. There is no labor involved, right? Now, if I happen to have a service-based business, for example, let's just say that I mow lawns. If I mow lawns, there is nothing I'm giving the customer. It's my time. To provide that service is my time, and that is going to be my cost of goods, is going to be that labor. We want to separate out the costs that are identified directly with producing the product or service. And for some of you, you might think, oh, I don't have any cost of goods. most of the time you're at least going to have your labor. There's some few times when you don't have any cost of goods at all. But for the most part, I want you to start thinking, what are those costs to do it? The second part, which are your expenses are going to be everything else that you have to spend in your business to be able to run your business. So if you have advertising out there that you need to be able to get those clients, that's going to be an expense for the business. Insurance that you need to have to be able to run your business, stuff like that. All those are going to be expenses to run the business. Repairs and maintenance on your vehicles, stuff like that. Those are going to be expenses on the business for the most part. So you got sales minus those cost of goods to provide or produce the product, and then the expenses, which are the operational expenses of the business, and then you're going to have the profit after that. And that's going to lead to our next point, which is that profit. That profit isn't all yours to put in your pocket. Many of you guys will say, okay, I'm going to go buy the pen. I'm going to go sell the pen, I'm going to pay my other things, and then I get to put all the money in my pocket. It doesn't work that way, okay? Your profit has 3 jobs that it needs to do. Job number 1 is it needs to pay your taxes. It needs to take care of Uncle Sam. You need to get in the habit of putting 10 to 20% away into a tax account that's separate away from your money so you don't spend it to pay those taxes. It's the number one thing that kills a lot of businesses is they owe tons of taxes at the end of the year and they just don't have that money. So you want to make sure that you open up a tax account and just start shoveling some money over that way. The second job it needs to do is retained earnings. It needs to be left in the business because there are going to be times when you need to go out and you need to purchase more materials or goods. And there's going to be times when you might get hit with a bill that only comes once a month or once a quarter. You need to be able to have the cash to be able to do that. Another thing that might happen is that you might have a month where you are losing money. For example, if somebody has $40,000, I had somebody the other day, they had $40,000 in sales and they were at the same time, they lost $4,000 in profit. Well, that $4,000 has to come from somewhere. So if hopefully they had the $4,000 in the bank, that way they can offset the fact that the business ran short that month. So retained earnings, you're leaving them in the business to be able to help grow the business. And then the third job it does is to be an owner's draw, and that's the money that you're going to take as part of you doing your job in running a fantastic, great business. Now, there are some other things going on there, which is paying you correctly. I've got some other videos on how you want to make sure that you pay yourself correctly because you're also the employee in the business. We want to make sure that you're getting paid that way as well. But that's a different video. You can go check that out and we'll do it again here soon. But 3 jobs for your profit and loss, or for your profit. So please make sure that you are not spending it all because it's got 3 jobs that it needs to do. Which leads to a question that I get all of the time. Tammy, if I made $5,000, why is there not $5,000 in my bank? Well, there's several reasons why there may not be $5,000 sitting in your bank. And part of that has to do with behind the scenes. So if I go out and I purchase these 10 pens, right, but I put them on a credit card, at the time of the transaction, it's going to hit my P&L for those 10 pens. But I've chosen not to pay it at that time because I'm not paying my credit card in the same month that I make the expenses, which is the thing you need to do. You need to be debt free. But let's just say you're carrying it. Well, now you're making a payment in the next month. Well, you can't put it on your P&L because you've already captured it when you originally bought the 10 pens. So what's happening is your profit, let's say you had $1,000 worth of profit. Now all of a sudden behind the scenes, it's paying for those pens for any credit card charges that you have. It could also be for a car loan if your car is part of your business. It also could be going out for an SBA loan or some other kind of loan that you've got going out. So sometimes that profit hits, but because you've already captured the initial piece, you're losing the money behind the scenes. But there's another thing that tends to happen all the time, and that is you are nickel and diming yourself. I can't tell you how many people when I'm doing their books that are taking out $500, $300, $100, and then they're turning around, putting it right back in. Because what's happening is you're siphoning the profit through the month, and then you're realizing you didn't leave enough in there to be able to pay the bills, and you're having to put your money back in. Sound familiar? And that reason is because you weren't going to have the profit, and you pulled the money out assuming you were going to get the profit because you forgot the profit had those 3 jobs that it needed to do. So a lot of times when people don't have money in the bank from what their profit is showing, it's usually because of debt is probably the number one reason. And the other part is that they've been constantly pulling out the money. And what happens is they get to the end of the month and they've already pulled the money out for various reasons. So it's important that if you're finding that, that's exactly why. Now, let's talk about some of the fun things that you can do with a profit and loss. One of my favorite things to do is you can break it down into better categories. So for example, a lot of people have all of their income lumped into one. Well, I love getting a hold of somebody, whether it's through coaching or through bookkeeping, and saying, hey, let's break out your income into at least 2 categories, if not 3, depending upon their business. So for example, if they have residential and they have commercial, let's break your sales down into the sales you take in residentially and what you take in commercially. Or it could be that you have 4 different income streams that come in. Why not break your sales down into those 4 income streams so you can watch and monitor how that money comes in? You can look for trends, which we're going to talk about in a minute, but it allows you to be able to see and understand and break and use the P&L to something juicy that can do something for you. Same thing with your categories. A lot of people just dump everything into business expenses. Well, I don't know how that helps you understand where your money's going. If everything is dumped into one category or into 3 or 4, you want to break that stuff out. You know what? Even insurance, if you're somebody who has a bunch of different types of insurances, wouldn't you rather have that insurance broken out into the different insurances versus having one big lump sum of understanding that? Same thing with supplies. You have office supplies, you have job supplies, some of you have job materials. There's all kinds of different things. You need to break things out correctly so you can understand where that money is going. So use categories in your profit and loss. It's going to help you out, and it's really going to give you some key insight into where your money is going, which leads us to the next item, which is trends. And I talked a little bit about this. What I love about a profit and loss statement is you can print it up by month. You can have it for the year broken down by month. You can actually compare it a lot of times to the year prior, and you can start looking for trends and you can start seeing what's going on. I can't tell you how many people, when I'm sitting there talking to them through coaching, that I go, okay, what did you do next month, last year? Well, I don't know. Well, what are you even targeting? You know, if last year you did you even know that last year you did twice as much sales as you did before? Well, I knew I was busier. Yeah, you did twice as much. Oh, I didn't realize it was that high. Or the vice versa. Did you know that you're going to start dropping? Well, yeah, I don't drop for a couple more months. No, according to your P&L, you start dropping next month. You need to start now preparing that you need to dial back on your payroll and on some other things. The power of trends is, once again, it just like categories, when you use the 2 of them together, it becomes a very powerful tool for you in your business to be able to grow your business, but more importantly, grow those profits. And that's ultimately what we are here for. So 2 really cool things a lot of people don't understand about their P&L is those categorizing and trends and using them to your advantage. Now, I want to talk about the final thing, and I actually just, my last podcast video was actually on this, and that is garbage in, garbage out. And bad bookkeeping is going to give you bad numbers. If you just decide, hey, I'm going to open up my P&L and start using it, well, and if you haven't been doing and staying on top of, getting your information into the P&L and using it, well, it's not really going to help you out, because I can't tell you how many people are looking at it and they're like, oh, look at all these sales and I should have all this money. Well, yeah, but you haven't inputted half the stuff that you did for the business yet. You're not capturing everything that has to do with the business. Or, for example, someone the other day, they have so many business purchases on their personal cards, it was never being captured in their books. And your business, you need to have those separate, okay? You need to make sure that it's important that your business transactions are on your business accounts and your personal stuff is on your personal accounts, because you're missing out both directions, because your P&L is falsely, if you're doing personal stuff on your business, you've got bad numbers, right? Because you've got a bunch of personal stuff in there that doesn't belong to it. But on the other hand, if you're doing a lot of business stuff on your personal and you're not getting it into your P&L, then you've got a lot of business costs that aren't being captured that way either. So garbage in, garbage out. You need to make sure that you separate out those transactions. You get them as clean as possible. If you need money from your business for personal stuff, do not use your personal card. You turn around and you do a draw, take it to your personal, and then go make it. And if you need to buy something for your business, you need to make sure that you use the business account. I get it. When you're short on money, because remember those retained earnings we talked about earlier, this is how they all work together, right? You have no money. You need to buy something. Because you have no retained earnings, you use your personal credit card or something like that. And then you're messing. That's what I mean. It's the numbers start getting so garbaged and garbled all because you're intermingling everything. So it's really important that you're not doing that and that you're making sure that you are not garbage in, garbage out. Just make sure that you're using good stuff, good numbers, because that's going to give you the best stuff. And that's where a good bookkeeper comes in. That's where a good bookkeeping system, whether, I prefer QuickBooks for people because I think it's very easy, QuickBooks Online. You want to make sure that you're setting yourself up to have the best P&Ls. And if you really want to understand even more about your P&L, don't forget about the course. It's ridiculously how cheap and effective it is for you to be able to start learning your business numbers. I try to make it nice and simple. As a matter of fact, you get lifetime access to it, so you don't have to memorize it all right now. And I do have a goal in 2025. I know I've been saying this forever. I am going to update it, and you get free updates if you're part of the course. But it really does help you get a foundation of your business. So I challenge you, go down, look down there in the show notes if you're really wanting to learn more about your business numbers. You can't go wrong. But with that, hopefully these 10 things help you understand your P&L a little bit better. And if you want to learn more about a profit and loss statement, I'm going to put a couple videos up here that are going to help you dive into that P&L and understand them even more and start diving in and looking at it more closely. And I try to make it nice and simple. So if you've got any questions, put them below and I'll be glad to answer them on a future video. Bye for now.